Should employees spend more time at home if there isn't enough work? Or should they actually work more to increase productivity? This is a dilemma that many Swiss companies are facing 6 months after the National Bank lifted a peg to counter the rise of the strong franc. Agricultural machinery maker Rapid Technic has plenty of orders lined up, but has seen a decrease in profit because of the value of the Swiss currency. In February, management decided to keep wages untouched, but extended the working week by 2 hours, as Rolf Schaffner, the managing director, explains.
We are now seeing the positive effects of these measures. We can now rely on an increase in sales figures not only to Switzerland, but also for exports. As it looks, it has been a good first half of the year. We are now trying to maintain this trend.
Once the situation improves, Schaffner expects to bring back normal working hours. Making the working week longer increases a company's productivity and helps to bridge a difficult period. A recent survey of the machine industry showed that 13% of 1,400 companies had increased working hours. Daniel Lampart, chief economist at the Swiss Trade Union Federation, is critical of this move.
We've seen a large number of companies increasing working hours, but without an increase in wages. But the big problem is yet to come. Layoffs, like we've seen in the hospitality industry. There, 10% of the jobs have been lost. By the end of the year, we expect to see how the manufacturing industry will be affected.
Before the layoffs, another option companies can pursue is shorter working hours. In Canton Zurich, Bucher Industries has employees working 3 hours extra per week. But this hasn't stopped cash flow problems. Its managing director may consider other options.
Incoming orders are on the decline. If we want to keep our workforce, and at the same time we are convinced that we can make it through this difficult time, then we need to consider having shorter working hours, so as not to cut jobs. In this way, we can together return to growth.
Frank Halter, a researcher in small and medium-sized companies, sees problems with both strategies.
Both shorter working hours and an increase in work performance are measures that can work only on a short-term basis, but they don't solve a cash flow problem.
If the strong franc is here to stay, increasing or decreasing the amount of working hours doesn't seem to be a good long-term solution.